So today we had the Federal Reserve make its decision to pause interest rates, which is exactly something that I've been saying was most likely going to happen since September. In fact, we also saw that the overall markets, if we take a look at the S&P 500 index ETF SPY, had a little bit more of a push upwards, which is exactly what I've been saying was most likely going to take place in my last previous videos. However, I want to provide a friendly reminder that this relief that we're seeing in the market is something that I believe is temporary. It's provisional. It's not something that I believe is going to be long lasting or sustained. And this is because even though we had the Federal Reserve make the decision to pause rates for the third consecutive time in a row, it doesn't mean that financial conditions are easing. In fact, the opposite is actually taking place, where we're going to see more financial instability take place as all the previous rate hikes are still coming through the pipeline. For example, Tesla has recently just increased the annual percentage rate for financing its vehicles in the US, and this is with excellent credit score. So if you have an excellent credit score and you were to finance a new car, just a couple of weeks ago it used to be 6.49%, and now it's 6.69% for 72 months, and for 84 months it used to be 7.36%, and now it's 7.61%, again with stellar credit. And this proves my point that economic conditions are going to remain elevated and get much more tighter as we move over into 2024, especially in the first and second half. And so this is why things are still economically challenging. Yes, we're seeing a bit of a rally. I said that things were going to start to see some relief. We're seeing that with Tesla stock in the overall markets, but I don't expect things to start going into all-time highs just yet. There is still a lot of challenges that are, coming towards us, especially considering the fact that this is the, interest rate if you have good credit. Think about the individuals who have poor credit, and believe me, there are a lot of them. When I used to work at the bank, I was honestly amazed how many individuals have terrible, absolutely terrible credit. And so when they go to finance a new car, say trying to buy a new Tesla, well, they're going to have interest rates that are enormously high, which means that it's very unaffordable for the average person to buy a Tesla. And yes, Tesla is still in the lead in the EV space, but that doesn't mean that Tesla is not going to face some challenges coming along. But with that said, I want us to go ahead and hop into my laptop. This way we could just take a quick look on what's going on with the overall markets, Tesla, and what are some things that I believe are most likely going to take place. But before we do so, make sure to subscribe to the channel if you have not done so already. This way you don't miss out on any future video, and also make sure to check out the links in the description of this video as well in the pinned comment section below, because one of the links is going to be a link for my free weekly market pulse insights, where every single week I send out an email talking about what's going on with the overall markets and what are some things that you should be aware of. And guys, it's completely free, so there's no reason why you shouldn't sign up with your email. But with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and as I mentioned in my two last videos, we are seeing that relief that I talked about with Tesla stock and the overall markets. As I pointed out earlier, I talked about how I expected the markets to have some sort of relief, especially after a long period of selling taking place towards the end of October. And I talked about this multiple times, and this is why I think it's important to keep things on record. I don't upload videos and then go and delete them. I like to keep them up there. This way, if you guys want to, check me on anything, you guys could feel free to check out my previous videos. But I talked about tax loss harvesting and how a lot of these mutual funds and these big institutions, they end their fiscal year on October 31st, and so naturally we were going to see some selling take place. Now I'm not going to go ahead and hawk on that because I talked about that in the last two videos, and so what I really want to talk about is what we're currently seeing and what are some things that we could expect moving forward. I think that's the main reason why you might have clicked on this video, and so that's what I want to go ahead and cover. And so while everyone is talking about mostly about the Federal Reserve and the decision to pause, we also have to talk about a couple other, things that took place today, or events, or data rather, that took place today that has a huge significance on what takes place in the overall markets going forward that I believe a lot of market participants are neglecting. Okay, so the first thing I want to talk about is that we're having the Treasury issue out more bonds, more than last time, right? And so this is something I've talked about for quite some time on this channel, for months now. It's not new, but I'll go ahead and briefly repeat it, but government spending is at a ridiculous place. And this is a huge issue amongst politicians, right? And again, I try to be agnostic to the political environment, but if you're going to be aware of what's taking place in the financial markets, you can't be too agnostic. You can't say, well, I don't care about politics at all, right? I'm not saying you have to choose a side. You could definitely have your own opinion on what's taking place, but the matter of fact is that, government spending is unsustainable at the rapid pace that's going, and what takes place when there's a lot of government spending is that you have the government or the treasury issue out these bonds, right? And so essentially, when you have a whole bunch of bonds entering into the market, a whole bunch of supply, but the market isn't buying, or other governments aren't buying our bonds, they're not buying our treasuries, what happens? Well, those bond prices go downwards and the yields go upwards. And of course, a lot of the lending that we do is tied and pegged to these yields, right? And so I know that may be something that is simple for some, or complicated for some, but just to put it simple, what we're seeing is that the Treasury announced today that it's going to sell $112 billion in notes and bonds next week, and that's up from $103 billion last quarter, okay? And so, I'm not going to go ahead and dive too deep into this, but the main point that I'm trying to say is that government spending is at this terrible pace. And so what we're seeing is more of these treasuries, these bonds, these notes get issued out. And the problem is, we know Bank of Japan, Bank of China, they're investors, and these foreign countries, they're not buying our treasuries like they used to. And so that's the reason why we're seeing bonds go down and the yields go up, and that's bad, okay? Because that means that financing gets tighter. And so that's one of the questions that was actually brought up a couple of times to Fed Chairman Jerome Powell in his speech after the decision on monetary policy. But in addition to looking at the bond market and its yields and how that impacts the market, we also had the ADP report show that the job sector, right? And let me, before we actually break this down, right? So for those that may not know, sometimes I got to break things down, right? So the ADP report is the job report that we get, and it comes before the government numbers. It's from the private sector, okay? And it comes before the government numbers. And what we're seeing is that jobs, or the labor market, for the second month in a row is, or you see it right here, ADP report, or job report, weak for the second month in a row. And so we're seeing the labor market soften. And so one of the questions that was asked to Jerome Powell is, hey, if we see, the economy expand at this pace, because we see GDP is actually going up, and we know that inflation has to, come downwards, and we know that the economy has to grow at a below trend level, but we're seeing things actually pick up, and we're seeing that there's a lot of jobs. Well, will inflation go down? And I hope I didn't lose anyone there. And so what Jerome Powell ended up saying is that, hey, yeah, we probably will need to see the labor market soften more. And this is something that I've been pretty much focusing on for a while now, that the labor markets are going to continue weakening, and that's going to be a huge issue for the overall markets. And it's not that hard to go ahead and explain, right? Let's go ahead and think about the concept with Tesla, right? We know that interest rates are going up. We know that obviously, because there's this influx of bonds hitting the market, treasuries are going up. That impacts how lending takes place for houses, and also auto loans, and all sorts of types of loans, right? It's very unaffordable to afford a car at this level. If you're going to buy a new car, it's very unaffordable. That provides a challenge for Tesla and, of course, all the other automakers. But on top of that, the only reason why our economy is very strong is because we have a lot of people employed. But what happens when people start losing their jobs? Well, they don't get their paychecks. And when people can't get their paychecks, well, you can't go ahead and buy a new car. It's very simple. It's not a difficult equation. And so, yes, we're seeing this relief on Tesla, and I am going to continue to monitor this relief. I believe that, looking at it from a technical perspective, if Tesla continues moving up, we're going to want to monitor it around this 215 level, as we know there's a lot of volume relative to price around over here. So that could create somewhat of a resistance or a shelf where Tesla gets rejected. And let's go ahead and look at a daily time frame. Again, that 216 level was also the same area where we bounced up last time. And so old support can be new resistance. And so if we're looking at Tesla from a technical perspective, yeah, we may see some relief take place. But as we get closer to this level over here, let me go ahead and try to draw a little line right around over here. Oops, that was the wrong type of line. Look at me making silly mistakes here. If we actually draw, just a kind of like a resistance level, and again, I don't like to only focus on the markets looking at it from a technical perspective, right? Stocks don't have to adhere to the squiggly lines you draw on the charts, but technical analysis does have its time and place, and it is a data point that you are going to occasionally want to look at. And so when you combine that, yeah, things seem to be bouncing up, and economically things are not well, I can't expect Tesla to go up at these high levels, because you can't have price at an absurd level when these multiples or the earnings don't justify these multiples, okay? And so if Tesla stock is at these high levels but it's not making that much money as it was in the past, well, then it's unreasonable to have Tesla stock at a high price. And so that's why I'm saying, hey, we're going to want to monitor Tesla. If you're trading, right, Tesla in the short term, yeah, you're going to want to maybe take advantage of this rally going upwards, but be careful, because it's not something that I believe is going to really hold its weight for a long time, okay? And so same thing goes with the overall markets. It's not just Tesla and Silo. I believe that the overall markets as well, we're seeing a lot of push upwards, but again, I don't think it's going to last long, especially when you look at things from an economic perspective and also a technical perspective and also a fundamental perspective. And that's why I look at, Tesla stock and a bunch of all these other stocks from multiple data points. And that's what I cover with the Push and Profit private group as well. In fact, one of the DMs I got recently on X.com was someone saying, hey, Justin, I love your videos. I love that you really go into details on the things that you explain, but how come you only talk about Tesla stock? Now, I want to go ahead and address that, right? Tesla stock is definitely a stock that's popular amongst retail, and so generally speaking, there are a lot of people that watch Tesla stock, and so that's pretty much one of the reasons why I go ahead and provide these videos, because retail is the mass majority holders of Tesla stock, and so I want to let retail be aware of what's actually taking place. But one of the other questions this individual asked me in this DM was, hey, well, do you talk about other stocks other than Tesla? I would love to get your analysis on that. And the truth is, I do sprinkle some ideas publicly here on YouTube. For example, in the past, I talked about gold, how gold was definitely a great player, especially as we had the conflict in the Middle East. As generally speaking, when there's geopolitical conflicts, we see commodities like gold rally upwards. And so I do definitely sprinkle some gems here on YouTube. But if you want to have access to, my daily trade ideas and my daily perspective on the overall markets, that's going to be the first link in the description of this video, where every single day I provide a daily briefing to the Push and Profit private group, and I talk about what are things that I'm watching. I don't do that on every single video because if I, and people don't understand this, but if I go ahead and make a video on let's say Microsoft, although I could talk about Microsoft as much as I want, if I do on YouTube, unfortunately there's not that much attention for Microsoft. And so if you guys want the perspective of what's actually going on with other securities, definitely, again, check out the first link in the description below. But I try to generally talk about Tesla and the overall markets as well, the S&P 500 index ETF, but I also want to provide a friendly reminder, okay? And this reminder is on a couple of things. I am bullish on Tesla in the long term. Yes, I believe after we rally and get rejected, most likely in the future, we're going to have some more economic pain for Tesla, but I believe that as we move forward into 2025 and 2030, Tesla is going to be a great position to hold in the long term. And again, this is general advice. This is not personal advice. And you should never trade and invest in whatever you don't see value in. Of course, if you agree with what I'm saying, then of course you could go ahead and trade and invest in whatever you see value in. But you shouldn't blindly copy what I say, or what anyone else says on YouTube or X.com, or any fund manager like Kathy Wood, Gary Black, whoever it is that you listen to, right? Not Jim Cramer, not whoever you listen to. At the end of the day, you have to make your capital work for whatever best suits your situation. And the stuff that I say, I could say that generally I like Tesla, but again, I don't know your personal financial situation, and this is not personal financial advice. I am not your financial advisor. I'm not a financial advisor. Let's just get that clear. So hopefully You guys understand that? And again, I don't have a crystal ball as well. I have to kind of mention that in all these videos. And I know it seems like I kind of get the price action very accurate time and time again, but it's simply because I'm looking at the market from a larger lens. I'm not just looking at the little squiggly lines, right? So taking a look at the market from multiple perspectives. But with that said, we'll continue to monitor Tesla stock as it moves closer to that 215 level, as well as the overall S&P 500. We'll continue monitoring that, and of course there are some additional data points that we're going to want to continue watching, especially the public government job numbers that come out this Friday. But again, if you guys want more insight on what is my outlook on the overall markets, it's going to be the first link in the description below. And before I go, guys, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.